beginner traders are often thinking that it's go hard or go home. They put too much money into each position. They don't examine it from every angle first, and they're shocked. They get so shocked when things don't go well. So that saying there are no old, bold traders, I think is just so key.
Hello everyone and welcome to a new episode of Conversation with Leaders. I'm Josh Gilbert, a market analyst here at eToro, and we've got a great episode in store for you today. But before we get started, a reminder to like, comment and subscribe to our channel to stay up to date with all the latest episodes. Today we're joined by Louise Bedford, a behavioural finance expert and a best-selling author of 6 books. Louise has been a trader since 1990 and has degrees in both psychology and business. She is the founder of Trading Game, a mentor program that looks to help investors maximize their own trading potential. And today we're going to dive into the psychology of trading and investing following the release of her new book, Investing Psychology Secrets. Louise, thank you so much for joining us today. How are you doing first and foremost?
Oh, fantastic. I have been so looking forward to this.
Good. It's great to have you with us. So I mentioned at the top there, 6 books. That's absolutely fantastic. So tell us a little bit about your career and what gave you the inspiration to really start writing these fantastic books.
Sure. Well, look, I started trading in 1990, so I know it's just so long ago, but I was in the corporate world. It was fantastic. I was climbing the corporate ladder, bit of a champion with it, actually. But unfortunately, not only did all of that get taken away from me, all of a sudden I had a health issue that was very critical. I couldn't move my hands and arms, and it took a few years to recover from that, actually, and I could only trade. There was no other occupation that was available to me. I traded with a pen in my mouth, tapping out the buttons. I had a human broker on speed dial because it's kind of difficult to do everything yourself with just a pen in your mouth. But luckily, because I'd learned how to trade, by the time I did need to leave my job, by the time they got rid of me, I was ready to go. And I was in business, trading, and I had people asking from all walks of life, especially people with a disability, how do I trade and how do I get off the pension? How do I create a separate income so that I don't have to be dependent on anybody else for the money coming in? So yeah, that's how I started writing these books. So it's just been fantastic. And my new baby, Investing Psychology Secrets, has just been so well received, talking about mindset tricks and data-driven methods so that you can improve your trading. There's science-backed ways that you can improve your results with very little effort.
Yeah, amazing. And what a fantastic story that is. Really inspirational. I mean, trading with a pen back in the 90s sounds like a pretty tough gig, let alone doing it today in 2024. So let's dive straight into that new book, Louise. In there, I've had a quick look through the book and it is fantastic. You talk about success habits and the key routines for creating a winning strategy. Some traders believe that they've just gotten lucky when it comes to trading sometimes, especially after a profitable trade. But how can traders shift from relying on luck to a more structured, repeatable strategy?
I think this is the core of what we are talking about as a professional trader. We can't rely on luck. Otherwise, hey, those results won't duplicate into the future. So one of the first things to do is to note that lucky people, and they've shown this in studies, lucky people actually synthesize information very well. I'll give you an example. The research that was done, they gave a group of people who self-identified as lucky and self-identified as unlucky a newspaper, and they said you have to find 42 things. It was like a treasure hunt in the newspaper. Now, the lucky group finished in 2 minutes. The unlucky group took hours. What was the difference? By the third point, they said, skip to the end, you've finished. Now, in the newspaper, it is a lot of detail, just like with the markets. A lot of conflicting information. You're getting bamboozled by shiny objects. You're reading too much and too little in other areas. So the lucky people knew that to take their time, to take a deep breath, to calm down, and to take things structurally, that is actually a better way than freaking out. So in the markets, it's just the same. We need to apply ourselves to a written trading plan, a trading plan that covers our entry, exit, and position sizing. Now, if you are more advanced, it's also important that you've got your trading system, but you've got your psychology together and the maintenance part. So are there markets you should drop? When you look at your equity curve and it's above its own moving average, should you be piling in more? Because I would say yes, because you're in sync with the markets. If you're underneath your own moving average in your equity curve, you should lighten up by decreasing your risk. Now, there are aspects to the maintenance part that professional traders are not relying on luck to create, but they are making sure that they are taking the market signals, applying them, and it's making their equity curve sing.
Yeah, some really great points there. And I think, anything in markets needs that sort of structured strategy, and especially when it comes to trading, having those points in place, are the key to ultimately being successful. But on the other side of that, Louise, from your years of being in trading, what do you see as some of the, let's say, maybe top 3 mistakes that people make in their trading plans, and how can that be avoided?
Look, I just did a trading plan review with a client this morning, and I'll tell you some of the things that he did wrong. Because I think it's interesting, isn't it? We can learn a lot from other people's errors. One of the things is that he didn't include some of the very specific things that you need to be able to include. Things like portfolio heat. So important that you don't open too many positions early, because if you do, you can actually be out of sync with the market, or the market can actually not be doing the thing you were hoping for, and you can be swept away, and your overall portfolio heat shouldn't exceed 7%. So between when you enter and when you exit, let's say it's 1% risk, you shouldn't open more than 5 to 7 new trades before it shifts up to break even. So the first one is making sure your system is 100% robust. That is one of the mistakes that people make. Another mistake is thinking that they can wing it. They get a cluster of losses or they get a cluster of wins. They get into a mood tunnel and they think that's the way it's going to continue forever. So just because you're making losses now doesn't mean that will continue. I think that is one of the things that we always have to take into account as a trader. And if you're making lots of profits, that doesn't mean that's going to continue either. We always have to work on ourselves to make sure that we're in the right mindset to trade effectively. And I'm going to go with the third one here as being not understanding the role of psychology. Now, there was a study that I just think is just so clever. They looked at people's self-worth and they presented a threat. Now, the threat was a tarantula. So what they looked at is, could the person with low self-worth correctly evaluate how far away the threat was? Now, those people with low self-worth thought the spider was much closer. The people with high self-worth went, I can evaluate this threat, I know how far away it is, and I'm seeing the world objectively. And traders who have higher levels of self-worth make more money in the markets. It's been shown time and time again, many, many studies, and we need to work as hard as we can on ourselves as well as our trading plan. So I do think that is something that we need to take into account, Josh.
Yeah, it's really great to dive into that sort of psychology side of markets, because it does play an important factor. Quite often when we talk about sort of investing in markets, we talk about that emotional impact on markets, and sort of not letting emotions drive how you invest or trade. So to dive into these psychology parts is sort of fantastic. And I think one of the areas I wanted to talk about as well is maybe some common misconceptions when we talk about investing, when we talk about trading, but I think particularly when it comes to trading. What do you see as some of the most common misconceptions in trading, and how do you then think investors and traders overcome those misconceptions?
I think it varies whether you're a beginner trader or whether you're a more mature trader in the markets. So, beginner traders are often thinking that it's go hard or go home. They put too much money into each position, they don't examine it from every angle first, and they're shocked. They get so shocked when things don't go well. So, that saying there are no old, bold traders, I think, is just so key. Now, advanced traders sometimes get stuck in a rut. Now, if you're used to trading, I always suggest it's good to have 3 markets that you can trade, because usually out of those 3 markets, one of them will be trending. But advanced traders sometimes forget to look further afield. They maintain a very poor track record in one of the markets and they don't drop it because they're familiar with it. This is something that is an awful narrative to have, because you're thinking in terms of a fixed mindset instead of a growth mindset where you can learn new things and you can take on better ideas from where you are. So, in summary, for the beginner traders, make sure you do your homework. And for the advanced traders, don't get stuck in a rut.
Yeah, absolutely. And I think that's a great point to sort of make, is not letting you get down on yourself. And it comes back, I guess, to that sort of self-worth point that you've mentioned as well. Just diving back to the book a little bit, you mentioned in there about the difference between how men and women invest. And we've done a lot of surveys over the years through our retail investor beat. And we have noticed lots of difference between how men and women invest differently. When it comes to trading, is it true that females trade and make more money than men?
Actually, isn't this controversial? But yes. So I wasn't sure whether that Brad Barber and Terence O'Dean study could be replicated, because that was way back when I first started trading in the 90s. But through my website, tradinggame.com.au, I've been able to run surveys on my people. Now, my traders there, some of them have been through my mentor program, but all of them have picked up my free trading plan template. And this offer is definitely available to everybody listening today through tradinggame.com.au. So using that trading plan template, that is the basis of successful trading, regardless of your gender. So you wouldn't think there would be that many differences, because, that whole we're not exactly the same, but we're equal, etc. Look, there are definite differences. I'll even give you a structural difference, which is very peculiar. In between our brain, the 2 hemispheres, is a little area called the corpus callosum. Now, the female's corpus callosum is much thicker and more dense and has more activity going through from each hemisphere compared to a male brain. Now, what does that do? It means that females, they light their brain up in both sides more easily than a male. Now, what does this mean for traders? Because I think it's good to look at the neuropsychology, but then how can we apply it? Men, we love your testosterone. You are the get up and goes. You got us out of the caves. Fantastic. But perhaps remember to educate yourself before you go into the markets. This is not a competition where you have to win and club thug over the head. This is, you are competing with yourself. You are doing everything that you can to provide for your family, I understand. So that does bring up those feelings of testosterone. They have shown traders who are male have higher levels of testosterone than those that are non-traders, which is interesting. But you can actually do yourself a disservice if you don't calm down after trades. So things like making sure you have adequate sleep, making sure that if you have aggression, that you take it out in the gym, making sure that you have a support network around you so that you can share your ideas and down temper that testosterone level, because the best traders are the ones that do get that dopamine and testosterone spike, but they've learned how to recover the quickest. Now, for women, I've got some advice for you here. You have to listen to the data. We have more self-doubt than the male traders. We don't think that this is our domain because it has been forced down our throat that the guys are the ones that can do this. But let me tell you, my best trader was 8 months pregnant when her truck driver husband left her. And because of the lovely aspect of trying to do very well after you've been left when you're 8 months pregnant, has become a superb trader. She used all of that annoyance and fear to be able to convert into action, and she's an exceptional trader today. So you can take all of the things that make you a woman and apply them in the markets and make money because of it.
Yeah, I think there's so much more to in investing and trading than just the data, as you say. That psychology level of things. Following the data is one thing, but then obviously keeping emotions in check is the other. I want to go to the next point, and this was the part of the book that I think stood out to me, because I think it was something that I could sort of refer to myself and really gain from, is sort of really recovering in markets from a big loss or a bit of a market knock. If you've been in the markets for a long time, you've been trading or investing, you certainly would have had those. And even if you're starting, it's great to know that this is likely going to happen. So it's about maintaining, that investing and trading strategy over the long term. So how do investors, traders recover psychologically after getting a bit of a knock in the market or seeing a big loss?
Yeah, look, it is a big thing, this, because if it hasn't happened to you yet, it will happen. We always think if we can just stick to our plan, we'll only incur that, say, 1% risk level, and we think that will be the worst. But pretty much every single trader breathing has ended up losing more than that in one of their trades. Now, I have to say, one of the things is basic fitness, psychological fitness. Now, psychological fitness is how resilient are you from bouncing back after a knock. It can be applied to your life, absolutely every area. The best traders are the ones who look after themselves. They look after their fitness, their diet. They look after their sleep. They have regular breaks. They don't just sit in front of their computer and trade. They have that nice up and down part of their day. So yes, they're focused in flow. They're really throwing themselves into their routine and exactly what it takes to make money out of the market. But then they back off. They remember to breathe. They take their time coming back to the screen so that they can return refreshed. A lot of the difficulty with traders, especially when you've been trading since 1990 the way I have, is burnout. It's decision fatigue. It's overwhelm. Now, any of those areas can make you take your eye off the ball and not get the results that you deserve. So you need to find ways in advance to be able to cater for that and to accommodate that in your life. I think it's so important to take breaks. It's so surprising to me that people don't.
Yeah, and I mean, that's great advice. I mean, just stopping, grabbing a cup of tea, whatever it might be, and just sort of removing yourself from maybe a situation, then coming back and reflecting. And we spoke a lot already about, the emotional side of trading. I want to dive into that a little bit more and talk about emotions. You made a great point a moment ago about one of your best traders and sort of the scenario that she was in. When investing your own capital, it can quite often become a battle with yourself, right? And so how do you see people managing their emotions, things like fear, and does it really make a difference to people's results if they aren't able to manage that emotion effectively?
Look, you make a valid point, because when I started trading, I have to admit to you, I was all over the place. I was sky high with joy, and then just the slightest little thing would go wrong and I would be just crying under my doona, literally a pathetic creature, just rocking and rocking, just thinking I'm never going to be able to do this. Now, I think I probably drove my husband and friends crazy with that. So we do have to remember there are people around us that get impacted through emotional contagion. So we do have to remember them as well. But let's have a look at our own emotions. Now, if you are experiencing these things, just know that this is normal. This is normal. When you start out any particular skill, if you're training for the Olympics, to begin with, you're going to be full of self-doubt, not even sure whether you're going to make it, not sure that you deserve a place on that team, and maybe even thinking that you're faking things until you actually make it onto that team. All of these human emotions, you have to allow yourself to feel them. If you block them off first without allowing I call it my inner lunatic, without allowing my inner lunatic to go crazy and to feel all the feelings, then that inner lunatic gets silenced and squashed down. Now, whenever we've got a subconscious implication going through our brain that we can't detect, we haven't articulated, it's not out on paper, that has the ability to self-sabotage our behaviour. As a trader, you do not want that. You want to, and I'll give you the clearest way to work this through, you want to use a morning journal. A morning journal is something where you write down all of your thoughts. It's different from a trade journal. For all of the traders out there recording, what did I do well? What would I do differently? Yes, that's part of it. But a morning journal is where you just aim to keep the pen moving, write about anything and everything. I have kept one since I was at uni. I discovered I have a theme. There's a theme going through about my sister. Apparently, I'm quite envious. Didn't spot it until the journal. Didn't spot it. So now I've been able to work my way through that. Cheapest therapy that you'll ever get. Write down all of your thoughts, face them, look at them on paper, and you'll be surprised at how much that alleviates that subconscious desire to hurt yourself.
Yeah, mate. And I think so much about what we've discussed so far comes back to that sort of taking care of yourself element. And I think that is so important when it comes to the investing world and how it can, ultimately change your lifestyle and help you with, trading and investing and having a successful trading and investing portfolio. Louise, you mentioned there a little bit about the Olympics. I want to sort of dive into something a little bit more. I want to talk about sports because eToro has been supporting sport for many, many years across the globe now. And in the book, you look at the parallels between athletes and investors. So can you tell us where you see the similarities between the both?
Absolutely. And I know that you do support sport. I think that is just so fantastic. I was interviewing Don Elgin, who's a member of our Paralympian team. He is just so awesome with his optimism. I think traders, we do need to have that optimistic view that we can do this, we can conquer this, we can achieve. Also, Don surrounds himself with other athletes. So what he does is he looks to them for support, but also when things aren't going well, for information. So we need mentors in this game, and the mentor may come from somebody like you and I through a video, but it's very likely to be a fellow trader. And without that, without feeling that you have support through your spouse, through your family, you need to rely on those around you even more. And so do the athletes. And the best athletes are the ones who take care of all of the little things that make a difference. They're going for the 1% differences. You, when you've been trading for a while, may not get a knock it out of the park big change to your trading. But you can definitely refine things, definitely make all those tiny little adjustments that mean that they add up to a big change overall. I'll give you perhaps one that we can all implement today. Let's say your goal is to be a super trader, okay? This is the thing that you want. Now, firstly, it's a very nebulous goal. I know a lot of people have got that as a goal, but it's incredibly broad and a little bit ill-defined. So what I want you to do with your overall goal is to break it down into the tiny little baby step. What is the first thing that a super trader would do? I'm guessing look at a chart. So every time you look at a chart, know that you're on track. You are climbing that ladder of being that super trader. Look at the tiny 1% changes that you can make and the tiny 1% parts of the habit that you are wanting to encompass that you can implement today.
Yeah, absolutely. And I think another, great point also you mentioned, about those parallels between it and basically being a part of that 1% club. And I think a big part of what athletes have in their favor is, practice often makes perfect. We'll often see them on the tracks, on the courts, on fields, and ultimately making themselves the best that they can be, and using things like virtual accounts for investors and traders can really be useful in terms of, crafting your knowledge and honing in those skills that you've learned over time, which I think leads me on to the next point, Louise, I'd love to get from you is looking at getting research, because again a big part of of investing and trading, and we've mentioned it a few times already, is making sure you don't avoid really getting the data and understanding markets before diving in. We have the eToro Academy here, which is full of guides and videos and podcasts, etc., to help you learn, and again, been a big part of your journey as well. So what fascinating research do you think traders and investors need to be aware of for them to excel in markets?
Look, the first one that springs to mind is actually when I was talking with Tom Barso, who is one of the market wizards written about in Jack Schwager's books. Now, Tom is a lovely man, and he actually says that what we need to do is to look at each of our individual trades as one data point on a list of 5,000 trades. So no one particular trade will make or break you, but when you add them all up, it gives you a general trajectory as to where you're heading as a trader. So the first thing I think that we need to be aware of is that we can't consider this one particular trade to be the be all and end all. It's just not. If you're in this game for the long term, which I hope we are, I hope everybody listening is, I want to be doing this from the old person's home, we need to actually consider each trade individually, but they're not having that much of an impact. So take the things that you learned and apply them for the future trades, but know as long as you're growing, that is one aspect that you need to incorporate to be an effective trader. So look, some of the research, one of the things that I think is so interesting is because there is so much research in other areas other than just trading, we can implement this as a high performance individual. So the one that I think is fascinating is they had a look at London floor traders. They measured their testosterone and they found out that even though their testosterone was higher when they were on the floor, they could calm themselves down very quickly. You can do this. You can do this yourself. On your phone, and I want to give you a little practical exercise to try, right? When you've been out walking or running or whatever it is that's got your heart rate up, maybe it's even looking at the screen, have a look on your phone. You can actually put your fingertip up against the camera and it can measure your heart rate. Can you learn how to calm yourself down quickly? If you can, that means not only cardiovascular fitness, that is an example of using your mind over your body. It is such a fun way to go because you can say, I don't know, do you know your resting heart rate, Josh?
I actually don't. I actually don't know what it is.
Okay.
It's funny you say this. We actually had a conversation in the office earlier today because one of the guys was actually talking about measuring his heart rate with his watch, and my comment was, I actually don't know what my heart rate should be or where it is. So yeah,
okay, so that's your first step. So in terms of breaking down this habit, get down to the very smallest building block, which is find out your resting heart rate. Find out then what it goes up to when you run up a flight of stairs. And then how can you consciously bring it down? So I'll give you perhaps something to try because I think this is something we can do right here and right now. There's a breath, it's based on a yoga breath, but it is scientifically proven to relieve stress. So I want to give you something practical you can do after running up and down those stairs, but also before you begin to trade so that you have clarity of thought. So are you prepared to do this with me, Josh?
Yeah, let's do it. Let's go ahead.
Okay. Now, it's like the sound of when a baby is trying to calm themselves down from a tantrum. Okay. So it's... So I'll break it down for you. It's 2 quick breaths in and then a slow breath out. You want to try it?
Yeah.
Okay, let's do it together. So, and then slow. Okay, so if you do 3 of those before you sit down to trade, what that's doing, it's not only getting oxygen into your brain, it's clarifying your thoughts. You're linking this to a systematic approach to how you trade over time. So your body will get into the habit of being able to use this breath to not only calm you down and focus, but to say, I am on, I'm ready for the markets. I am going to achieve today. So having that habit, having that routine before you even open your trading platform can really help you excel.
Amazing. Yeah. And look, I think breath work has become, really important in today's society. I have a lot of friends who are athletes and sports stars, and, they do a lot of work with breathing techniques and things like that. So some great practical tips to sort of really take away. And from a psychological level, some really, really great points throughout, Louise. Look, it's been a pleasure to have you on. Thank you so much for joining us today.
Oh, it has been so fun, and I would love to stay in touch. Josh, let me encourage everybody who's watching this and listening to this to come and visit me at tradinggame.com.au and download that free trading plan template, because not only will that help you maintain clarity of your thought, it will also give you the chance to be able to stay involved. I'd love to keep in touch with you and, of course, with everybody listening to this show. I've loved it so much. I've been a big supporter for a very long time. I love what you're doing for the trading community.
Fantastic. Thank you, Louise. And to make sure you stay informed on markets, head over to the eToro Academy to get all the latest news, and stay tuned into Conversation with the Leaders to get the latest from the experts. Click subscribe and don't miss a beat. Thanks for watching, and we'll see you all next time.